Hello everyone, this is Ryan for Numbers Up Finance, and today we're going to be looking at some trading options for the next couple weeks, entering the week of 12/31/18. So a quick little Happy New Year to everybody. We're closing in on 2018, entering the new year. Want to make sure that we keep our technical analysis sound moving forward, and as always, let's make our goal for 2019 to keep our numbers up. That being said, let's take a look at some options moving forward. So to start, we'll look at the SPX. This is the S&P 500 index. This is a very good indication of how the market is performing in its entirety, as this is essentially the market itself. So recently we've had a very, very large sell-off over the last couple weeks. We've had bearish indications all over the place. We have been losing lots. A lot of things have been occurring. A lot to discuss there, but that's not what we're going to get into. The point of showing the SPX is that it has been very difficult to formulate swing trades or to be comfortable trading over the last few weeks, simply because the markets have been moving at such extreme rates. We'd have 2%, 3% sell-offs every day, and then we'd make that back the next day, and then we would lose it the day after. It hasn't been mirroring the consistent 10-year bull run that we've had prior to the sell-off. It's been very abnormal. It's been very dangerous for a lot of traders, and it's been very hard to find safe setups that you can just put in as a swing trader and just kind of relax on. You've had to be very on top of things. You've had to be long one day, short another, and it's been very difficult. So let's try to find an option today that we can do that heading into the next few weeks is pretty safe, is pretty reliable, and we won't have to be entirely dependent on the way the SPX is performing to know that our trade is going to work out. So again, this is the way that the market performs entirely, the S&P 500 index. And in order to find a trade, let's first take a look at the 11 trading sectors we have. So there are 11 major trading sectors that did not know. And today I want to spend some time looking at the energy sector. So the ticker symbol for the energy sector is going to be XLE. And this is representative of all stocks that trade in the energy sector. And the energy sector mainly represents oil, gas, and production companies. So looking at that, we can see what can we trade from XLE. Well, XLE is not showing very good signs of growth either. It's had a lot of sell-off over time. It's been difficult to formulate any solid trades with that as well. But there could be positions within XLE, the energy sector itself, rather, that we can find potential in. So I mentioned that in the energy sector, oil, gas, and production companies are included. So one of the things we can look at from that is oil. So the mini future for oil is going to be /CL. CL represents crude oil. It's the future for it. Futures are traded on the clock. Unlike, they do not trade in regular market hours. Traded on the clock. So what we're finding out of the future for crude oil is potential for a good swing trade setup. So here's why. To start, we're going to look at a solid support level that has been found in this future. So if we actually take a look at the 10-year one-day chart for /CL, we can see that there is a very, very solid support found around the 42-ish price point level. Why do I say that? Well, if you just look at this level, you can see that over the last 10 years, we've had about 1, as you can see there, 2, 3, 4 points of significance, significance being a reversal. The first point right here, you can see that there was that the $42 price point range was used as a resistance. The price was rejected, it came up, it did not pass. And then if we see it other times as well, if we zoom back out there, that 42, once it was cracked as a resistance, has served as a very, very strong support level. And that is very significant moving forward, because we actually see that right now for the crude oil mini future, we are actually sitting just above that $42 price point range. And if you look closely at what has happened over the last couple of days, because this is the one-day chart, of course, we've actually shown signs of bouncing off of that level. So this is good, right? So we have a bounce off of the $42 price point level that we have in the past seen proven as a support. So we already know this is a support level, so we're expecting a bounce off of it. So that's good. We know that the mini future for crude oil is showing signs of growth over the next couple of days, weeks even, because of a bounce off of the support. So let's take a look at some oil positions then. So one heavily traded oil ETF that we can look at, or oil and gas rather, is GUSH, ticker symbol GUSH. So let's take a look at ticker symbol GUSH as a swing trade setup. As we can see here, GUSH is now sitting at a low over the last 10-year one-day chart that is. It has shown a low right now of 5.9 just a couple days ago on the 10-year one-day chart. So that means over the last 10 years, we hit a low price point of 5.9. So the ETF for oil and gas, this is a triple leveraged ETF. This is representative of oil and gas stocks. This is something you can trade in the energy sector, and this is something that we might be able to find growth out of, right? Because we saw that the mini future for crude oil was performing well and ready to bounce at a support level. So GUSH should be doing the same thing, right? Well, let's take a look. So in setting up a good trade, we want to make sure that we have a reversal point coming. A couple things come off the checklist. Number one, we have a very oversold RSI indicating down here. And how do we know that? Well, the rule of thumb is that if an RSI level is below 35, which it is here, that we can assume that it's oversold and that it's likely to make a bounce back. You can see that occur on the RSI level very frequently. So that's a good sign. Another good sign to see from this stock is, or this ticker symbol rather, is a bullish divergence forming on the MACD. So again, if you don't know what a bullish divergence is, it is essentially when the momentum, which is indicated by the MACD, is making higher highs while the price is making lower lows. The price is in divergence with the momentum, and we don't necessarily use that as an indicator in itself, but we can use that as an indicator among other things to see that there is potential for solid reversal. So a bullish divergence, again, momentum is making higher highs while price is making lower lows. And if you can see right there, that line is indicating that the momentum lines are making higher highs, the momentum being MACD, of course. So a lot of things are doing well for this. So a lot of things are pulling for this position. But I have a problem with it. As I mentioned earlier, GUSH is at a low point of 5.9 over the last 10 years. So what does that mean? Well, it means we're in uncharted waters. And that said, we don't have any support or resistance lines to play with. I mean, we have resistance lines slightly ahead. You could, play around with it and draw some yourself, but we don't have any support lines. And what happens if we don't have any support lines? Well, that means we don't have a feasible stop loss, which means our risk reward ratio is not known. And that is very, very dangerous to have going into a trade. So, although GUSH is showing signs of potential reversal, and although it grows fairly significant as a triple leveraged ETF, it is not a position you really want to get yourself into simply because you don't have a feasible stop loss set. And if you don't have a feasible stop loss, well, that's kind of breaking the number one rule of trading. So, if we go back to CL here, we still can find a position that would trade off of this, right? Well, we found one that works in most cases, but is one that I would tend to avoid. GUSH, because again, it didn't have a stop loss. It's in uncharted waters. Now let's take a look at one that I do think is going to be a good buy over the next couple weeks. That is USO, ticker symbol USO. This is representative of the United States Oil Fund, as you can see up here. Pretty straightforward. Looking at that being said, we can take a look and see that USO is very, very similar to the ticker symbol CL, as we just mentioned, the crude oil mini future. So unlike GUSH, USO is representative of just oil, not oil and gas. So that's why it shows more similarities to CL or /CL than GUSH did. So let's take a look at USO. USO on the 10-year one-day chart. So these are going to be daily candles over the last 10 years. Right, so right now we're sitting at a price point of 9.53. And as you can see, I have a line drawn here. Well, why do I have a line drawn here? Well, if you look throughout the last 10 years, there are many, many points in which this line serves as a reversal point, that being a support for the most part. You can see many points. So if you take out right now, you can see one here, here, here. And as you can see, it's pretty much just over the last couple of years as crude oil has been falling over time, or rather the price of oil has been falling. But the point is you can see many, many significant reversal points. I mean, it serves as support once, twice, 3 times, 4 times, 5 times. And as you can see, we have a setup right now for the trade. So let's take a look at some other things. All right, so we're at a proven support level, right? All right, well, what else goes off on our checklist? Well, we're also in an oversold RSI region. That helps. That's something that we want to see. If it's oversold for the RSI, it's bound to bounce back up, correct? Because, just look at the chart patterns. Every time we see an RSI oversold, it typically comes back. And when it comes back, the price grows. You can see by following these charts, the RSI is oversold right here. And then if you take to the point where it is pushing overbought, that is a roughly 13% growth in 19 days. That's what we want. So we're sitting in an oversold spot right now. So we have bouncing off of a clear support region. We have RSI, and now we have one of the most important ones, a bullish divergence. So the bullish divergence, again, discussed earlier, this was present on GUSH, but this is also present on USO. And this means that although the price is going down, the momentum is going up. It is making higher highs, and that is crucial in seeing a reversal point, especially in something that's been actively trending downward. So now looking at what USO has that GUSH did not have are clearly defined support and resistance areas. GUSH had that, but not at where it currently sits, simply because it was at an all-time low. So let's take a look at the current price point of USO, and if we were to position ourselves in a trade, how could we do it? Well, what we would do is we would set a stop loss very slightly below our known support region, and that's why the support regions are so huge. They allow us to have a known stop loss area, and typically your stop loss should be directly below not directly below, but slightly below your anticipated support. And we didn't have that on GUSH. We didn't have an exact region to set a stop loss, and that can be a very dangerous game to play as a trader. So that being said, with our support level of around a $9 price point, or roughly around $9, more $9.20 region. That being said, we can set a stop loss slightly below that, maybe around the $9 region, slightly above the $9 region. I would shoot for about a 4 to 5% stop loss on this. That leaves you about 1% below your stop loss on, well, let's just take a look at this one more time. So if we're sitting at a 953 price point region, and we go slightly below our known support, we're looking at anywhere between a 4 to 5% loss, which is reasonable, as opposed to your first target area, which is about 10 to 11%. That's double the risk-reward ratio. That's what we want. That is something that is very good in a successful trade. And even if we don't hit that target region exactly, we will hit near 10% nonetheless. Another important indicator that I didn't mention yet is the beta level of USO. So essentially, the beta analysis tells us how USO, or any ticker rather, performs in relation to the first ticker we mentioned, SPX. So a positive beta in this reading, as you can see down here, the flat line in the middle of the beta reading, that is representative of zero. But if I can just make this larger for you guys. So a positive beta reading means that the position is performing at the same way that SPX is performing, or it's performing in the same direction rather, while a negative beta reading is telling us that it performs the opposite of SPX. So what is a beta reading that is performing positive and negative all over the place tell us? Well, it tells us that it is essentially mutually exclusive from SPX, although it's not entirely mutually exclusive. Essentially is. I mean, it's something that can do its own thing. It doesn't necessarily need to perform the same way the market indexes are, although it has times where it performs very similar to it. It is capable of increasing while the actual market decreases, or vice versa. So that is something that's pretty important to me in a time like this and looking for a reversal, simply because, I mean, the market itself is in a very unpredictable state, like I mentioned at the beginning, and we want to find something that isn't going to perform parallel with the market. We want to find something that's going to perform, in its own sense, something that's going to have capabilities of showing profits while the market itself is in a state of fluctuating. So the beta tells us that this is exclusive from the market. It's capable of performing in the opposite direction. And that, to me, seals the deal on this being a good position. So just to recap one more time, the energy sector, if we take a look at the crude oil mini future for the energy sector, which is a bit of a delay there. Sorry about that. A bit more of a delay. Okay. Nope. There we go. Okay. Sorry about that. So the crude oil mini future for the energy sector, we can see that there are many signs of a reversal. And if we take the direct ticker from that USO to look at oil and isolate it specifically, we see a bounce off a known support region, an oversold RSI, a bullish divergence on the MACD with crossing MACD lines showing growth, and we also see a beta analysis that tells us it is exclusive from the market, allowing it to grow even though the market might be performing negatively. So that is my option that I would like to see going forward for the next couple weeks. It is a position you can hold probably for the entire week moving forward, I would imagine, just based on prior performance. It's something I would keep your eye on. It's something I would consider, and that I'm going to be looking forward to over the next couple weeks. So thank you guys for watching. Please subscribe, comment, like. All of that is greatly appreciated. And as always, get your numbers up, and Happy New Year to you all, and happy trading.